were talking a little bit about FHA and we talked about VA, but you said the credit scores and everything is what we were talking about.
With our bank, FHA, we require a minimum credit score of 620 for an FHA loan and 610 for a VA loan, which is a little bit on the lower side compared to a conventional financing, which will typically require 620 to 660 at a minimum. But the great thing about FHA is they're a little more flexible on underwriting qualifications for a buyer to get into a property. Typically, basically the debt to income or ability to repay the loan requirement is a little bit looser than that of a conventional loan.
Well, and let's talk about the debt to income a little bit, because what that means is that includes all of the payments that you have to make on a monthly basis, whether it's your car payment, whether it's any credit card payments, student loans, everything, correct?
Yes, and what we look at is two numbers really. Basically what the percentage of the actual mortgage payment to the income is. So say you have $2,000 or $1,000 a month in income, we don't want the mortgage payment to exceed 47% of that figure on the front end. Basically, that's called the front end ratio. The back end ratio is your mortgage payment plus all of your other monthly debts, your car payment, your credit cards, anything that shows up on your credit report.
There is a new regulation that comes out that actually is really good, that has started as of any loan that was applied for at the beginning of October, correct? That you have to get, there's more paperwork that has to be given to the buyer before closing.
Well, we're under a new rule. We call it TRID in the mortgage industry. So in the past, we had to provide a good faith estimate and a truth in lending statement in advance, within 3 days of application. So what they've done is they've changed the names of all the documents and the formats. So at this point, it's called a loan estimate up front. And then it used to be a HUD-1 settlement statement for the closing numbers. Basically, the day of closing, you would get the figures and really have little or no time to review it. The new rule is that 3 days prior to closing, we need to give you what's called a closing disclosure, or abbreviated CD. And that is the actual final figures that you have to receive 3 days in advance of closing. So it is a major change to the industry in whole.
Yeah, and then the other thing that you do that is kind of a slam dunk for a lot of people, for first-time buyers, because we have a lot of first-time buyers that are always asking us, are there any programs out there for us? And one of them that works really good is that MCC tax credit.
Correct. It's for first-time buyers. It's called the mortgage certificate credit. And basically, the buyer will take a class online or in person regarding first-time home buying and the experience of buying a house and what you need to watch out for. And once they have that certificate, if the buyer has not owned a home in the previous 3 years and is inside the income limit for the county in which they're buying, they can qualify for up to a $2,000 a year credit on their tax returns for every year they occupy the property. And in return, what that does is basically gives them $2,000 a year and more income, which helps them to buy more house if they choose to.
And the other thing is, when it comes to refinancing, I know that we were talking earlier that the interest rates are maybe going to jump up a little bit. I mean, all the indications are there that there could be an announcement next week that could happen, and we don't know whether it will or not. But if that does happen, there are people that may be still thinking that they might want to do something with the loan that they have. And is that easy to do?
Absolutely. We love to do refinances. It's a pretty streamlined process, and we certainly welcome any applications if anybody's interested in talking about it. But the rates are still very low. We can still get FHA rates in the high 3s and conventional rates in the low 4s, high 3s. So definitely a great time to refinance if you're looking to get cash out for home improvement or cash out to buy an investment property. Debt consolidation, that's always an option with refinancing as well.